Monday, May 1st. And I always start out with, this is market analysis and Stan Ehrlich, the stock market indexes, the S&P 500 in particular. So you're looking at a 1-minute chart on the left and the spider, which has just made new highs for the day, but that's not the real picture here. The S&P 500 is extremely close to making new highs, higher than the one on February 2nd. And that high on February 2nd was, just a moment, 418.31. We're 17.25, about high and last. Less than 1 point for new high for 8 months. Now, back on October 13th, I screamed bloody murder. It was the end of the bear market of 2022 and the beginning of the bull market for 2023, a gigantic bullish engulfing ER buy signal that has proven in the last 8 months to be very profound. The turning point, the day. So I'm expecting to see new highs for the trend and the bull market for 2023 continue. The S&P 500 is not yet overbought. It tried, not very successfully, to come down to close a gap at 396, 397. But I've said all along, gaps are almost always closed. So it appears that gap is not going to be closed unless we have some sort of significant failure here on this particular rally. And again, we're not overbought, so I don't see any particular reason except for resistance to stop this rally. It opened higher. It got down to around unchanged. It held. It turned around. It made new highs for the day. It's coming along pretty damn good so far. But you got to keep your eyes open for those reversals, for sure. Let's go look at the DIA real quick here. The DIA is high and last also for the day, and it has already made new highs going back to February 14th, not August yet. We're very close to a significant number of highs back in that December or January, February time period, I should say. And of course, a little bit higher, you've got those highs that were made back in November, December. And that's the last vestige of significant long-term support or resistance, because now you'll be going back to April, a year plus, if you can make it above, and it's not very far away, 347, we're 42 right now. We've broken bear trend lines. We've broken resistance areas, a lot of them, not all of them. And we're not overbought. So there's elbow room to go up. There's upside potential here. And I've been bullish again since October 13th. Let's look at the QQQs, which in general has led the way up in this bull market. And today, again, like Friday, it is making new highs since, what is this now? August 19th of last year. 9 months or so. Quite a substantial period of time. And again, of course, it bottomed out on October 13th. And it did have a head and shoulder bottom, and it is working just fine. And the minimum upside objective on the head and shoulder bottom for the QQQs is 347 almost. So I'm still very bullish on the stock market indexes. I can't rule out, but it looks highly unlikely at this point that we'll have another correction lower than last week's lows. But not at the moment. We're very strong. I'm going to say if we make new lows for the day today, in other words, completely turn around and start to make new lows, that could signal the beginning of another break. I don't see it. You haven't got the reasons for it. This bull market is coming up just fine. It's doing what we call climbing a wall of worry, waiting for the next piece of bullish news. Can the news support the trend, which is definitely up? Let's go look at futures. All right. And we got a couple of new stuff today, brand new ones. We'll get to them in a moment. The Spider is not only a futures contract, a S&P 500 E-mini, but it is also an index. So we've got it on both groups here. And of course, it is in the process of making new highs for months and not yet overbought at 65 and a fraction. Next chart. Soybeans had a bullish engulfing on Friday, as I told you. You're supposed to be a buyer anywhere you want, but the code says at the green dot, which was, I think 114, hang on, 1414 and an eighth, 2/8, excuse me, quarter. The low today so far is 413 flat. And it is currently trading at 425, almost high and last. We hit a bullseye. We bought almost the exact low. It was a minor retracement off of Friday's bullish ER buy signal, green daily bar. This could be a candlestick. It doesn't matter. I like vertical bar charts. I started charting by hand in 1971. All right. Next, soybeans looking good. What can I say? Bullseye. Next, heating oil. Now, we also got a buy signal on Friday on heating oil, right smack dab at a very, very important support area, almost exactly at the right price. Now, Friday's low was 2.3261, and today you have a low of 2.3268. So we did not get below the reversal day's low. Boy, came awful close, but that's support. Not particularly surprised. It held. It could, and it is so far. Now, I'd like to see it get up and make new highs. We bought it basically on the opening, so we have a very small loss. And we're not stopped out. Our stop is still at that green line, which is also covering my STS yellow dot, which you can barely see right there. Anyway, brand new buy signal. If you get in now, you're getting in cheaper than the forex. I'm sorry, code, the ER3 code specifically. And if we're wrong, which we could be, you'll have a smaller loss. If we're right, you'll have a bigger profit if you follow the ER3 strategy, or can manage to do it on your own. Nothing wrong with that. Next chart, bond futures and 10-year notes. Well, you know, it's been going sideways here. And at this particular juncture, I am going to mention a possible pattern that I don't want to actually work, but I see it happening, developing here, and that is a small head and shoulder top. The head of the formation is April 6th. The shoulders are pretty obviously the high to the left of April 6th and the high to the right. It's relatively symmetrical. There's nothing wrong with the way it's acting or working at the moment, so I'm claiming there may be a head and shoulder top here. Let's see what happens if it gets down to the neckline. Normally, you break below the neckline very quickly and sharply for maybe 1 or 2 days. You have a retracement halfway back up to the neckline or maybe all the way back up to the neckline. But the golden rule here is don't get above or close in particular above the neckline once you close below it. That should start the formation working. And it hasn't started yet. It just looks like it could. Let's go look at the 10-year notes. And of course, we've got the same formation building, or we should, but we do. And that's the lowest low after the first shoulder and the lowest low after the head of the formation. So this one slants downward very slightly. And there is something wrong with this formation. So actually, I'm not going to even draw it. And what is it? The first rally high is the highest high, and that would have been the shoulder if it was lower in price. Let's say the high that was on March 20th. That would have been good for a shoulder. but that violates all the rules. And so the pattern is not really a head and shoulder. You could call it a close cousin. It may turn out to be a little bit bearish. We'll see what happens here. Next chart, crude oil. Well, we did come down and close the gap that I was talking about for weeks, and that happened last week, specifically on Wednesday of last week. Now, today we've got an inside trading range day. I'm looking for reasons for this market to start to rally. We're almost oversold. Remember, I don't like 30 with Wells Wilder, who taught me RSI, likes 30 and 20, but he wrote the code, so to speak, the indicator, in one of his very earliest books in the late 1960s. So no internet, nothing high speed. And I'm using a variety of different inputs, put it that way, features, but basically it's an RSI. So what have I got? Nothing for the moment. Looking for the beginning of a rally, big sideways trading range, a little bit of a lack of direction here. Next chart. Natural gas. Same kind of comment, slipping a little today. No new highs or new lows for any consequence. We're at a very minor area of support. Next, gold, silver, and platinum. They're having some problems. We did catch on all three the exact low point, which was February 28th for gold, and in the ballpark for silver and platinum. And we had a heck of a good ride for a couple of months. Now, is it topping out? And it does look like it's trying to top out. There's a head and shoulder top looking formation, but I don't like the details, so I'm not going to push it. But I don't like the fact that it's not following through to the upside. We don't see any new highs lately. We're very close to some modest new lows for a few weeks, a month or so. Let's see what happens here. Could be topping out. Next is the silver market. And on March 10th, not February 28th, we had the lowest low for the trend down in silver, a bullish ER engulfing buy signal on the bottom, and a sell signal on the top. Now, we had two sell signals before that didn't work, but they tend to cluster. I've seen 3 and 4 in about a 4-week period. And here we have 3 buy signals. The first one didn't work particularly well. There's some money to be made there. Second buy signal had the same kind of comments. The third buy signal worked great. Off it ran like crazy. And then we started seeing signs like overbought and bearish engulfings and sell signals prematurely. But look at this. This morning, if this is not bad data, looks a little bit like it could be. We have a very sharp rally, but it didn't make a new high for the trend. It didn't hold. It fell right back down again right away, and now we're at unchanged. This is the makings for a big bearish reversal if it'll keep slipping here. And by the end of the day, if we do get below the low of Friday, we will have come up close to overbought, not quite. And wham, got slam dunk straight back down again. And now we're down just a squeak. Next chart is platinum. And guess what? We also have a bearish engulfing here today, brand new bearish engulfing. So I think the precious metals have seen their run for the moment. I can't help but I'm getting too many indications that they're going to have more of a downside move. But it was a nice ride while it lasted, and that again was from February 27th on the platinum. And all the way up to the highest highs at the beginning of last week. That was great. And overbought conditions. So I'm turning neutral to bearish on the precious metals. Next chart. We have live candle giving us a sell signal a couple of weeks ago, and it hasn't completely been demoralized. And here we have on another outside down day, which, because it's not overbought, did not turn red, but that's a bearish engulfing, and normally they're bearish by themselves. But if you include my other features, call them filters, you improve the percentage of the signals that are profitable. And of course, I have a formula that automatically, you don't have to do anything. Oh yeah, you do. You have to get up and get another cold beer from the refrigerator. You don't have to do anything. The strategy does everything for you. Puts you into the trade, takes you out of the trade, manages the money during the trade. What can I say? Live cattle looks like it could stall out here and start to slip back down. Next chart. High grade copper, neutral. It was oversold. Not much to say. Typical bounce. Next. Soybean oil, oversold. Looking for a bounce. Typical stuff. Did I say the wrong thing about this? No, I didn't. Sorry. And soybean oil looks like it's going to rally a little bit, but it's a bear trend, bear market, and maybe around 53, 54. We're going to see it stop moving up and turn around and start to head south. We did have a great buy signal way back here, December 12th of 22. Now, next chart. Corn. Great sell signal a few days ago. No problem whatsoever. A little bit of a bounce, short covering probably on Friday. And now we have a new low close possible and almost a new low. Friday was the lowest low already. And this has made some money right off the get-go. ER1 always gets into a trade. So every time you see a green or a red bar, you know I'm in a bullish or bearish trade. That's ER1. ER3 may not necessarily get into the trade unless there's a good retracement. And that's where the little green dots and the red dots come into play. Next chart is wheat. New low close probable, but we're oversold. Don't chase the market down. I may get a buy signal at any time here that will look pretty good. And because it's a bear trend, I'm not sure it'll change the overall trend, but that's okay. I get buy signals and sell signals for short-term rallies and breaks during trends in the opposite directions. We did catch, I'll point out again, the top of the market at the beginning of the war. And that was on March 8th, a whopper. From limit up to limit down, bearish engulfing after a series, a couple of weeks of limit up moves every damn day. That is an incredible, I won't see another one of these for probably another 10, 20 years. I remember a bunch of them back in 72, 3, 4, somewhere in there, the Russian grain deal. All right, next. Soybean meal, oversold, bouncing a little. Long-term trend is still up. Even though it's broken a trend line, we haven't really broken major support levels yet. So I'm looking for this market to turn sideways to higher. Next, live hogs had a buy signal at the bottom. We got in on ER1 always and ER3 also almost at the exact low of the next day. And it's been going up basically since. Today is a pretty hefty down day, but it wasn't overbought. I expect it to regain composure and start to head north and try to make a new high. Next, OJ. Oh, probably neutral to a little bit bearish, but the trend is up. Next, cocoa. Same commentary. Trend is up. I wouldn't do anything here except look for a retracement to be a buyer. Next, sugar is trying to resolve its overbought condition, and another close here, and then another dip tomorrow will eliminate the oversold condition. Overbought condition. And it's been that way for weeks, really. One of the longest stretches of overbought condition I can remember lately. So anyway, sugar to sweet. Looks like it may be topping out finally. I'm not sure yet. Staying away from it at the moment. Next, E-mini. That's where we began the futures contracts. So I'll leave you off here, but I do want to look at the indexes one more time. Quick peek here before we go. And come on. 1 minute spider has made a high and pulled back a little bit, but it looks like it's going to attempt to make another one next, I don't know, 30 minutes, an hour, 2 hours. I don't see anything bad here. I don't have any reason to believe that this is a turning point that we just saw. half an hour ago. Okay, have a great day. See you tomorrow, May 2nd.